Bank of America CEO Brian Moynihan struck a note of cautious optimism for the U.S. economy as more bank earnings roll in. Let's discuss with Herman Chan, senior U.S. bank analyst for Bloomberg Intelligence. And as I've been following you and Danny all morning covering these bank earnings, it looks like Bank of America beat on trading. Bank of America beat on net interest income by like 200 basis points and beat on advisory fees, which is where J.P. Morgan missed yesterday. So with all of these beats, better than analysts estimated across the board, essentially, why are the shares down 1.5%?
Yeah, it's an interesting topic because the guidance looks really strong as well in terms of expecting continued profitability gains and positive operating leverage. I think there's still some concern out there with a broader economy, the operating backdrop for banks, including what's going on with President Trump and the credit card cap issue. Those things continue to weigh on sentiment. And you should understand that for banks, they were really strong running up into this quarter. So a lot of this might be just some give back.
And the CFO at Bank of America very deliberately declining to comment on the credit card issue. What about Citi? Because this is a big ship that takes a long time to turn around. How much further did Jane Fraser get to course correcting in this latest set of results?
It is a multi-year endeavor, but they're making really tangible progress. You can see that with its efficiency ratio this quarter. That's improved 130 basis points year over year. And they're marching towards its goal of 10 to 11% returns on tangible equity. So we see really strong momentum across its businesses to really reach that goal for 2026.
And Wells Fargo also trying to turn the ship in terms of severance. I think they now have just over 200,000 employees, but they still want to reduce that to capture more efficiency. They're just paying more now, or they paid more in the fourth quarter, right? Over $600 million in severance fees to save money later.
Right, that's right. So they're talking about expense growth about 2% for 2026, which is a really solid cost control measure. They're talking about continued efficiencies, but also investing in their businesses to really improve the operating performance. So we'd expect that to continue. That's one of the big stories. Another big story about a turnaround in the big banks, and we'd expect more progress there as well.
All right, Herman Chan covers the banks for us at Bloomberg Intelligence. Really appreciate your time this morning because I know you're very busy.